Hello and welcome to Personable, a podcast focused on speaking to the world's best, enabling you to become the best you can be. My name is Harvey Bracken-Smith, and today I'm honored to be joined by Marcel Bens. Marcel is the CEO of Emil Capital Partners. He's got a master's degree in mechanical engineering from the Technical University of Berlin in Germany, as well as an MBA from Columbia Business School in New York City. I'm hugely honored and excited to speak to Marcel today. So Marcel, I'd love if you could take me on the journey through your childhood, why you've spent so many years in different countries, why you're fluent in so many languages, and if you could take me up to your years at university.
Sure. Well, first of all, thanks for having me, Harvey. It's great to see you again. So I had the great fortune to grow up in a very international environment. My father worked for the German government in the foreign services all his career. So he's German. My mother's Dutch. I was born in New Delhi, India. And then we moved to Washington, D.C. for about 6 years, moved back to Germany for a couple of years, spent a lot of my teenage years in Lagos, Nigeria. And after that, went back to Washington, D.C., our family, and I graduated high school then. And look, it was obviously a little unusual. Our household was, Dutch and German and English, obviously outside of that. So those are the three languages I grew up with. And we would spend, most vacations in the places that we would live in. So at that time, when you grow up, you don't always appreciate that. But looking back, of course, it was a very unusual, depending on who you ask, of course, unusual childhood. But it taught me a lot about, different cultures, different continents, different countries, people. So I do appreciate what my parents have given me. And it wasn't really until that time anything that I can say I did, right? Because I just followed along to where my parents were and what they did and what they wanted to see and where they lived. But what I try to do is instill this into my children on saying, go out there, see the world, meet people, meet different cultures, travel. Now, travel is fun. Pick the ones where it's not where it's not dangerous, obviously. But I think everybody should be open-minded and see the world. And so I finished high school in Washington, D.C. I went to mostly German international schools abroad, and then it drew me back to Germany. And so I then went to study in Germany. Graduated there and started working at a car company, Mercedes, which I'm sure most people know. At that time, it was Daimler Chrysler when Daimler and Chrysler merged, so that's kind of through university and into my first role.
Sort of going back for a second, I feel like a lot of people I speak to when they go about having children are like, I need to settle down. I'm going to be in this place for 18 years, for 20 years, keep consistency with my kids. Do you think that overall experience of moving around a lot was a net positive or a net benefit? And a net benefit or like a negative to you? And do you think it like made you unique in any way in how you think and view the world today?
Yeah, I think for me, it was absolutely a net benefit. Now, we shouldn't forget that it depends on how it's structured when you move around quite a bit. First of all, it's people dependent. So it's people dependent. But I always enjoyed it. And the simple reason was because the schools that I went to weren't local schools. These were international schools. So what made it easier was that everybody, when you join a new school, everybody knows the feeling of being the new kid. And so I always felt that it was much easier to integrate and into the schools. And you yourself were much more open-minded when new kids arrived because you integrated, because you knew what it was like to be the new kid. And so things actually worked quite well on the the other part was kids knew that, okay, you're gonna leave and in a few years, and I'm gonna leave maybe in 2 years, the other kid in 3-4 years. So there was a constant in and out. but it didn't diminish the bonds and the friendships that you created. It actually made them stronger because, most of my best friends were from the time I spent as a teenager in Nigeria. And a lot of my friends are spread out around the world. Now, the downside, of course, is you don't have a hometown to come back to. It's not like, hey, I'm in college and, I have a break and now I'm going back home and I see all my friends. That never happened, right? I mean, home was where my parents were. But for me, it was always a net positive because, I know I have good friends on every continent that if I'm ever there, that I can reach out to and catch up with. And, when you do have these bonds of being somewhat unique, as you point out, not everybody had the opportunity to live in Lagos, Nigeria, as an expat, then the bonds are quite strong. And so whether you've seen them last year or 5 years ago, you always have something to catch up on, and you always have something, as you put it, unique that bonds you. So I think it was a net benefit. I think it's dependent on the person, but it surely wasn't always easy, right, to move around. That's for sure.
I feel like there's some similarities between that and your career, in that you mentioned you've worked at what's now Mercedes, you worked in investment banking, private equity, you're the CEO of a chocolate factory. You've moved around a lot. When you first left university, was there a particular goal in mind of what you wanted to spend your life doing?
No, actually, there wasn't. And, I sometimes joke that maybe I kind of stumbled up the stairs a little bit, but I think it's just being open-minded and looking at opportunities. And I don't mean just switching opportunities randomly every couple of years. I think you do need to stick with something that you like and not grab the first best thing to move forward where you think this is where my career should be heading. But for me, it was really about meeting interesting people and being exposed to interesting projects. And if you're open-minded and people see that and you work hard and you put in the effort, then opportunities will come. And that's what it really was for me. It wasn't that I had a goal, oh, I need to be in this country, I need to do this job, or, I'm first going to do something, at a car company and then move into finance or strategy or M&A. It just happened. And I think that's, for me at least, I think that's the more realistic path. I think, life happens when you start making plans. And if you kind of realize that, it's okay, right? Change is the only constant. All those cliches are true. Most important thing is, in my view, I was open-minded to take opportunities as they came along. And from Mercedes, I met somebody very interesting who had an interesting project working on Mitsubishi. So then I jumped on that project because, he liked me. I liked working for him. And, and that's kind of the way that things worked in my career. And look, now I've been with Emil Capital for the last 13 years. But before that, of course, I've, kind of tried out different things until you kind of get to a point where you're like, I really like this. And now, can I say never is never? Of course, right? You never know. But what I always recommend is be open-minded and work hard, and put in the effort. And then things won't fall in your lap. Absolutely not. You got to go get them. But opportunities and doors will open, right? And that optionality, I think, is extremely important. You're working hard not for a pre-dictated plan, but you're working hard to keep doors open, right? To keep your optionality. And that's what I've always tried to do.
I think what's interesting, and this is more based on perception rather than actuality, because I was not alive when you were leaving university. But there's a lot of talk about Gen Z these days and what Gen Z are like compared to previous generations. And we're told that older, people in the past used to go into careers and work at the same firm for 20, 30, 40 years and build up their career. Whereas these days, people in Gen Z are seemingly having what they call a portfolio career. So they might only work at a firm for 1 or 2 years, and they might actually have multiple things at the same time. But what I think's like so interesting about that is I feel like you were sort of doing something back then, which people say is only happening today. And what I also think is really interesting is that, particularly in the environment I'm in, you have all
Mm.
these students. So I'm studying at Duke University in the US. You have all these students who come in being interested in music, in politics, in finance, in medicine. And I feel like they come to university, have these broad range of interests, and then there's this perception that everyone is doing investment banking, everyone is doing consultancy, and they have this 30-year plan for I want to be the CEO of this, I want to be the CEO of this. What advice would you have for those people? Would it just be to be open-minded? Would it be to go and experience doing something completely different to everyone else? Would it be to get that same experience working as a bank and working at a bank or something and then move on? What would your advice be for those sort of highly talented kids out of university?
Look, I think it's number one is find something that you really enjoy doing. If you love doing investment banking, do investment banking. If you love consultancy and solving problems and helping people think through things and strategy, do that. If you love being an electrical engineer, be an electrical engineer, and then be the best version of that electrical engineer. I think where it sometimes gets difficult is if you think that your career is going to be better if you do things like, oh, I have to do investment banking because it'll then set me up to do many different things. In my view, that's not necessarily the case if you don't like what you're doing, right? Because you won't be the best version of yourself if you really don't enjoy going to work, right? And if you don't enjoy doing what you want to do. So my advice would always be absolutely try things out. But you also need to remember that if you are at a place for 1 or 2 years, you're not really going to you're going to learn a lot, but you're not going to add value very much. And the adding value part comes after that, which that's where you build the relationships in your career, is adding value. And in the beginning, when you start out your career, everybody, or at least I felt the mentors and the managers I worked for, they were all very open to me learning. But there comes a time when it's kind of like, all right, now you've learned enough. Now you got to add value. And what I don't think is a good idea is to keep then kind of jumping around. But in the beginning, I absolutely try things out until you find something where you say, I really do like this. And if you like it, stick around. Stick around until you feel good about you creating and adding value. And then there might be a time where you want to do something else again. But I think that switch of, learning and then adding value is extremely important. But I'm not against at all, and the notion of Gen Zs jumping around. For me, it's generational at the point in time. But then I would always recommend, okay, now you've done 2, 3 different things. Now stick around for a little longer.
What I think is incredibly interesting about what you said about enjoying what you do. That's actually probably one of the most common areas of feedback that I've heard. And I think up to a certain point, people think that, oh, well, they're in this amazing position doing something they love and they're really successful at it. And I'm like, yeah, well, that probably makes sense. But I feel like a lot of people, when they're starting out, feel like they can sacrifice, or feel like they have to sacrifice the enjoyment because they don't think they can have success as well as enjoyment. And I think it's this really backwards mentality because, as you said, if you enjoy what you're doing, you're more motivated, you're more passionate, you're willing to put in those extra hours and eventually offer value.
Yeah. Yeah, look, absolutely. Now, on the to be also realistic, I don't think there is a job on this planet that you will enjoy every day. And there is certainly not every task or activity that you do in any job that you will enjoy all the time. And for me, that is realism of life. You got to sometimes suck it up and do the work, right? Like somebody said, be a Hoover, right? Suck it up and suck it up and do the work. You gotta push through. Sometimes, sometimes things are really hard, and many people, including myself, have had experience where a job just at points in time really suck. And when that happens, you push through and you're stronger because of it when you come out of it, right? I think that's important. What's not good is, and that's resiliency. What's not good is, and with that resiliency really comes that learning. What I don't like is if people, say they like their job, things become a little tough, and then say, "Ooh, this is not for me. I'm going to switch. I'm going to do something else." Right? That is not a good pattern. If that becomes a pattern, you have to work through those things. But absolutely, pick something that you enjoy doing, because there will be times when it's going to be really, really tough. But those tough times will be the moments that you learn the most. And again, making mistakes those mistakes are going to teach you what you need to learn for that job, right? Nothing's ever going to go well. I mean, what I do as a venture capitalist, there has never, ever been a firm that anybody's invested in that the story goes, like, "Oh yeah, we invested in this company, everything went great, and then we sold it." That doesn't exist. It's always like, we invested in the company, and then it went up and down and up and down and sideways, and then down, 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 and then maybe a little up and sideways, and then we sold the business, right? So that's normal. So you got to push through those times as well.
You've worked at Emil for 13 years now. Could you explain what it is, what you aim to invest in, and why you decided that that was going to be the place that you were going to add value?
Yeah, so we are consumer investors. We invest in early stage growth businesses in the consumer space, anything that touches the end consumer. We are category agnostic. Our investment professionals are generalists, and we look for interesting ideas, interesting businesses that solve meaningful consumer challenges. And that could be through innovative products, services that, for example, simplify daily life. But it could also be solutions that, enhance health and wellness and overall well-being. So those are the kind of frameworks that we look at that we think are interesting. It needs to be something unique. It needs to solve a unique challenge that consumers face. And we've been doing that, as you said, for 13 years. And the reason I like it, because these are, early stage growth businesses that need operational assistance, not just, high level strategic advice. And, given my background in engineering, and I always enjoyed rolling up my sleeves. And what we do is not just investing, and it's not, only financially dictated in looking for investment opportunities. It's really looking at what can we create that adds value to society, the community, make the world a better place, bit by bit, company by company. And I think that's important. And, that makes me feel good about what we do, because we invest in companies that want to do good. They want to do well, but they also want to do good. And that's what I enjoy about this role, right? It's operational, as you said. In the past, I've taken on assignments as CEO of our portfolio companies, which is then very operational. And then, as running the fund right now and investing in interesting businesses, and of course being on boards and advising them. And that's why I like this combination, because if you are on a board and you're advising a founder, it's better if you know a little bit about the troubles founders have and the operational difficulties, if you've been part of that operational world. If you're only kind of an investor and have never had an operating role, it makes it very, very hard. I don't think it's impossible, but it just makes it so much harder because you haven't experienced what to do. And with any kind of situation that I've encountered, 80% is execution. 20% is strategy and good advice and building a plan and having goals and targets and objectives and KPIs. But the 80% is executing on that. And that's where the rubber hits the road, right? That's the difficult part, is the execution part.
I think unless you're sort of in the VC or entrepreneurship space, I think it's quite hard to imagine the sort of dynamics. And I think if I didn't know anything about it, I would think that the first person that would offer me money as a founder would be, that's it. It's always the firms, the investors that have all the leverage. Um, but what I've seen, if you've got a really good firm with a really unique solution, there could be multiple investors that want to offer the money for a certain amount of the company. So what do you think makes Emil and makes you? I mean, you touched on it there with the operational experience, but I'm sure a lot of other VC firms or investors also have their unique attributes. So what do you think makes you guys unique and makes people want to choose to work with you versus other firms?
Yeah, great question. Obviously, there are many firms that invest in the consumer space, and many good ones. I think the way that we see ourselves, that is maybe a little more unique, or where we say that's where we have a competitive advantage, is that we are very founder friendly, right? That we look for companies that are founder run, that you can potentially, of course, build a team around that founder. That is necessary at a certain point in time, but we really want to get to know the founder and help the founder succeed. And through the advice and the work and the operational activities that we do. And given we've been doing this for 13 years, we have a pretty large portfolio. We've learned our lessons. So our experience with the companies and the mistakes that we've made, either in our operating roles or with other businesses we've invested in, that's what gives us kind of the edge of having seen a lot of things that small, growing, fast growing, early stage growth businesses experience. And it's often the same thing. And so we've built kind of a portfolio of experience that we can come in and kind of execute on to help from day one founders grow faster, right? And not make as many mistakes as they would by themselves, because we've already made those mistakes for them, and so they can learn from us.
If you've seen so many of these situations of what could go right, of what could go wrong in a smaller company, and you've had all these experiences, do you think there's a sort of formula to success, or do you find that a lot of what you do can be pretty reactive?
Yeah, so the formula of success is trying not to only be reactive, right? Now that's hard because things move very fast. There's always a lot of fires you need to be putting out, but going in again with a smart investor to really structure the 20% that I was talking about, because the 80% will be execution. But the better that 20% is structured, the more successful the company will be. So it is good to have a plan, to have targets, to set that all up. Now, the 80% execution, and that's where we do spend a lot of time, is dependent on people, right? And so we invest in people, not just the companies. We invest in founders, not just the management team. And and if we don't have a good feeling with the founder and the team, then we won't invest, because it's very hard to change that. And we've made mistakes in that as well. It's always disruptive to change teams. And so if you have a good team in place, a good culture in place, these companies will have a higher likelihood of success, and that's less dependent on the actual product or service they are offering, right? And again, a lot of people have heard this before, but an A team and a B product or service is going to be far more successful than a B team and an A product or service. And that's our experience. That's truly the case. And so we look for great management teams and great founders. And what is a great founder? A great founder is somebody who can listen and who really owns and is responsible for the business, right? And feels that ownership. And that's the same for the management team, right? If I sit in a management team presentation for a new company, and I just hear the founder or the CEO talk the entire time, that's not a good sign. What's a good sign for me is if the entire team speaks and the CEO and founder actually doesn't speak as much. That's a good sign. That means there's a healthy culture, there's a healthy team environment of solving the issues. Because while the CEO, and that's what I always say, while the CEO can, kind of give the direction and the path forward, the how do we do it doesn't always come from the CEO and shouldn't always come from the CEO, right? So that's where you need a strong team to be like, all right, well, how are we going to get there? Where do we want to go? Okay, that's the strategy for the CEO, but how do we get there? That's the team. That's the execution.
I'm sure you're going to get a lot of your portfolio companies changing their presentations after having heard this podcast, getting more of their team, getting more of, maybe the interns will start giving the presentations.
Yeah. Well, hopefully that's great. Yeah.
So they're going to know how to keep you happy now. So I feel like I've helped them out with this.
That's right. That's right. Well, look, and that's the whole thing about, an investment pitch. It's not so difficult. It's quite simple, actually, when you think about the structure of anybody who wants to pitch anything, right? You talk about the problem that's there. You talk about how can you solve this problem. So that's number 1 and 2. And then you talk about the team. And then you talk about the business. And then what a lot of people forget is what's the ask, right? Like, so what am I asking you? Why are we, why am I pitching this to you? A lot of people talk about, the business and the business and the business and the team, but they forget to talk about what's the problem and what's the solution. And what am I asking you for, right? And it could be advice, it could be, money, obviously, it could be anything like that. And so it's structuring this, in my view, is always quite simple. It's really 4 to 5 key things, but never forget to ask. That's quite important.
Looking at your LinkedIn, you're the CEO of Emil Capital Partners. You're a member of an exec team, the CEO of Next Food, CEO of Cherry Bundy, CEO of Goodbelly, and about 100 billion other things. Something that I think's been so popular in the news recently was the move of the Chipotle CEO. He took the business from a valuation of 10 billion, I think, to 70 billion, and now he's gone to Starbucks. And I think they gave him an incredibly large salary of, I think it was over maybe 100 million plus in stock options. And there was a big uproar from members of the public thinking, oh my God, he's earning so much money, blah, 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 blah. But also that he was only going to work in the office, say 3 days a week. He was going to get his jet from his home to the office. And I think it really made people think, like, what does a CEO actually do? I think there's this impression that a CEO is spending all their time working as if they're like someone in a restaurant. And people often equate hard work to success. So could you describe a bit more about like how you spend your time, how you're able to be involved in so many different companies, and just explain a bit more about that?
Yeah, so look, it's time management that over the years you just have to prioritize. I think everybody early on in their careers should focus on getting better at time management, right? And bit by bit, always getting rid of kind of the things that are not important to you at that particular time. And that's where a good team comes in. But you first need to build that team. Once you have that team, then it's important to focus on the things where you again can add value, right? And so yes, I'm involved in a lot of things, but it doesn't mean I do everything myself, right? I have a great team at Emil Capital. Within our investment team, everybody has a portfolio of companies that they manage. where they are either a board member or a board observer and in close contact with the CEO and the management teams. Now, there are certain companies where I am also additionally on the board to offer my help and my advice. And then as CEO of Emil Capital, it's really helping the portfolio managers think through certain issues and problems. And then, look, honestly, there's also a lot of administration work that I do. It's a lot of management. It's a lot of admin work. It's a lot of HR work. And, you also need to like that, right? You need to like working with people, because that's how I see my role. I talk a lot on the phone. I'm on Teams a lot. I'm in meetings a lot. Most of the day, I'm back to back in meetings, talking to people, right? And having conversations and discussions about challenges and opportunities of portfolio companies, new investments, and so on. And that's the same with my CEO role of a health and wellness brand, Next Foods and Cherry Bundy Goodbelly brands. It's a great, fantastic experience for me. I have a phenomenal team, and it's basically structured the same, right? Is working with the team to be the best possible company that we can, with the best possible products that solves the best possible consumer challenges. And but look, I read a lot. I get up early. I go to bed. I go to bed early, because sleep for me is extremely important. One of our companies is also very focused on sleep, and so I've been spending a lot of time reading up on that. And for me, I think it's personal. I need a good 8 hours of sleep, and if I get my 8 hours of sleep, I'm the best version of myself. Does that always happen? Of course it doesn't, right? But that's kind of my optimum, where I can add the best value. But that also means, I don't go out late. I try to go to bed early. But I like getting up earlier. I can reset. I can read. I can get ready for the day. And then, look, I think family is important. I have two kids, a teenager and an almost teenager, and I enjoy taking them to school and then going to work. So it's all about time management, and really also prioritizing. What I needed to learn in my career is, as a manager, to delegate and trust people that they can do the job, right? And if you have a good team, there's no need not to trust them and delegate, right? They will get things done. And I've become much better at not micromanaging, because I don't like micromanaging. And I think it's very hard for a CEO to be successful if they micromanage. And so that's where I don't spend my time. But again, as I mentioned earlier, I like to think as myself as kind of the guiding and thinking and helping people and team members think things through, and maybe giving the direction onto this is where we need to get to. And then, having conversations around how do we get there, and who do we need on the team? Where can we get advice to help us get there? That's really where I see my role as kind of the CEO, or as my former boss and mentor said, the chief everything officer.
I wish, I hope, and maybe it is true that every single one of the companies that you invest in become unicorns, never have any failures, and have a completely linear path to success. But I know that's not true, because you said that about 20 minutes ago. And I also hope that every founder you ever have has passed your criteria and is awesome and is accountable, and their whole team speaks through every presentation. But I know that's not realistic. You also mentioned that you don't like to micromanage, but I still feel like there's an area of focus that you need to add to each of your portfolio companies. So how do you balance your time, or maybe not you because you're now the CEO, but people in your company who you're trying to give the most resources and time and expertise to? Do you focus that more on the companies that are doing well, or on the companies that are doing badly?
Yeah, great question. And that's kind of that is I would say, the toughest thing, because as an investor, you want to spend most of your time with the companies that are doing well to make them more successful from a portfolio, from a portfolio management perspective. That is where most of the value for the portfolio and therefore for your investors will come from, is if you focus more time on the companies that are doing well and making them better, and more successful, because the ultimate, let's say, prize, is tends to be higher. Let's put it that way. But we have plenty of situations in the past with our portfolios, as I said, where companies, they don't go in a straight line. So things don't always go well. And when things don't go well, the hardest part is figuring out, obviously, how to solve those issues. But you can't just pull the plug every time something goes wrong, right? So the hardest part is identifying when is the time to, cut your losses. When is the time where you feel confident that you've done everything you can to help the company and grow the business and support the business to be successful. But you also need to, at some point, then pull the plug. And that's the hardest decision, because there are instances where a company that, let's say was near death, is very successful. And we have those in our portfolio companies. Again, when that happens, it's mainly attributed to the CEO and the management team. And we had a great company, and we have a great company in our portfolio company, that company called Aloha, that was, I wouldn't even say near dead. It was dead. And, the investors brought in a new manager, a new CEO, new management team, with the right strategy, real focus. The company had, I don't know, a gazillion products that it was selling, a gazillion SKUs, and we focused those products on a few key categories that ultimately became very successful. And this company is very profitable, growing extremely fast, and we're super excited about it. Now, we could have all pulled the plug on that business, right? But we didn't. We still saw an opportunity, and this company is now successful. So it's a great question, because that is the hardest thing for me also as an investor. It is the hardest thing, identifying when do you cut your losses, when do you pull the plug, and when do you keep pushing. And as an operator, right, I like solving problems. As a mechanical engineer by background, I love solving problems. And, but I always have to remind myself that, we also need to spend a lot of time on the good companies. And so I hope that answers the question. I think that's where I would say those would be the things that keep me up at night is, how do we fix? How do we fix, but not just fix, but really also help the companies that are successful right now, that we don't lose track of them and we don't lose focus on helping them continue to succeed.
All right. So as a founder, this is not me, this is a separate example, but a founder, they've seen you, they love Marcel, they love Emil Capital Partners, they really want to get involved. And I would draw a parallel between that and universities in the US. So you've got Harvard, Stanford, you've got the Ivy Leagues, you've got Duke. They're like, yeah, Duke's amazing, Harvard's amazing, I want to go there. You probably get tens, if not hundreds, maybe even thousands of founders reaching out to you being like, Marcel, I want your guidance, I think you're amazing, I want you to invest in my company, I want to work with you. How do you go about sourcing companies? Is it people coming to you? Is it you going after them? And how do you differ between all the noise versus the companies that can actually be successful?
Yeah, no, great question. So we have more or less recently, I've focused the team to be more proactive. Given what we do have a lot of inbound, and working with bankers and lawyers who bring us deals, but also through our network. So former CEOs, former founders that have been successful, who of course are still in this venture growth space, who bring us deals. That's always very helpful because, recommendations, referrals are always good than, a cold call. But I would say cold calls are also important. What for us is important is we don't just look at anything. We look at specific categories, right? Like I mentioned earlier, what do we focus on? And if that fits, if those criteria fit within our investment strategy, then we take a closer look. And then one of our team members has a conversation. And then, we have a typical, process that we go through to see, does this fit with what we want to invest in? So deal sourcing is obviously extremely important. There is a lot of inbound, but as we as a fund grow, we have to be more proactive. But we're still a small team, so we don't have a group of associates or analysts that can do a lot of market mapping and competitor analysis, and then so we are a smaller team, but we do focus on that more and more as we grow ourselves to make sure that we're more proactive in the categories that we are interested in. Those categories are, plant-based. They are health and wellness. They are simplifying daily life, and that can be consumer tech. That can be consumer, products, food and beverage products, personal care products. Those are the areas that we like to look at. Doesn't have to be branded either. It could be companies that offer services to a category versus just a branded business. Those can be very interesting for us. But again, we do more and more work in identifying categories that we want to play in, and then being more proactive to understand that marketplace through, smart market mapping.
I feel like this is a lot easier in public markets, but I've spoken to portfolio managers before, and they might build out their portfolio. They'll have their universe of, say, like 200 companies they're interested in. Say it's like banks or the consumer space or retail. And then they'll have their maybe like 30 or 50 companies, or maybe even less companies they'll invest in. And then they'll create these hypothetical scenarios to say, if I had invested in these 50 companies or these 50 or done this instead, this would have happened. Do you ever do that with companies that you didn't invest in? And then do you look at that to see that if I'd invested in these companies, I would have had this level of success, and then try and use that to get more similar companies in the future? Or is it a completely different process because you can't see how well a private company does?
Yeah, so it's exactly the latter. It's very hard to follow them if you don't have any information. And there are platforms, obviously, that you can sign up to that provide some information, but none of them are really foolproof. None of those platforms that you can subscribe to and you pay money for, none of them are 100% accurate. So I would say in the public markets, that follow-up is easier. Now, what we do, of course, is postmortems. We do also keep track of businesses. So if we decide that, look, interesting company, but it might not be for us right now, then we put them on the, kind of like wait list to stay in touch with, right? To have regular follow-ups with the founders, with the team, just to then also learn on what they're doing, how are they progressing, et cetera, et cetera. But it is harder to do it financially based with private companies with the lack of information. Now, we've had many experiences where we've seen the same company over multiple years with different, updates and different funding rounds. That's a way to keep track. We certainly do that. We have a quite sophisticated CRM system, customer relationship management system, where we keep track of, the companies that we look at. So every company that's inbound, every new opportunity, we put on the CRM system so that if we see them again, we can look up, oh, hey, what did their pitch deck look like 3 years ago? Where did they want to be now? And then we compare where they wanted to be now. And of course, if they've been successful in their path, then that's a big plus, right? For companies that are on our watch list or not wait list, on our watch list. Um, but the analysis of like what would have our returns been if we would have invested, that's very, very hard with a private company because it depends on the capital structure at that point. It's not always clear the terms of any kind of new deals. There is various information on the size of the rounds, but you still then don't know how did that deal come together. So unless it then becomes public, you can kind of do a little back of the envelope calculation. But of course, we've had instances where we missed an opportunity of a company that was extremely successful. I don't really worry so much about that, to be honest, because I worry a little more about the big mistakes versus the missed opportunities. But there certainly have always been missed opportunities. That's for sure.
I've seen many trends. I'm 20 years old. I've seen many trends throughout my life. Like, for example, the rise of smartphones. More recently, like cryptocurrencies, NFTs, the large-scale use of social media. And I'm not sure of specific trends in the consumer space, but particularly towards 2022, there was a lot of investment in that sort of crypto NFT space. Some incredibly large amounts of investment, incredibly high valuations, and then they dropped off a lot, mainly due to other market forces, but also because a lot of them were duds. When you're looking at companies, how do you make sure, you mentioned uniqueness is really important to you. How do you make sure and refrain from your perhaps more emotional side of hopping on that herd mentality when everyone's talking about crypto is the hottest thing, and going from, is this just another cryptocurrency company that's got a high valuation that's doing well because the overall market force at that point in time is doing well, or that company is truly unique?
Yeah. So great question. Very hard, of course, because you do get kind of pulled along in certain hype cycles. For me, again, it's the uniqueness is defined by the problem that this company is solving, and in a hype, it's often, it often happens. The Me Too happens too much. So then there's suddenly like 100 businesses doing the same thing. And that's where we get a little bit nervous and don't participate very often in these hype cycles, because then it's all based on timing. If it's so think about the plant-based category right now. It's been a big growth. It's resetting, and now it's starting to grow again. We believe in the category because we want to be patient, right? We want to kind of wait through the down cycle to then move to the up cycle again, because I truly believe that the category is going to be relevant for the future. We will need to supplement protein with plant-based protein to feed the world in the end, right? The protein paradox is our protein consumption per capita is increasing, population is increasing. Well, so we need more protein, and it won't all come from meats. It will come from plants, and so the category is there to stay. I just don't like to time it in a way that I'm timing it perfectly to the up and I sell before the down cycle. And with hypes that are not kind of long-term focused, it's all about timing. The next hydration beverage, could be very successful if you time it well. But if you don't time it well, it could not be very successful. But if it's a beverage that, in addition to a very, big category and very fragmented competitive category, solves a unique issue, a unique problem, then you don't have the timing issue. Then it's just, working with the company to grow and selling it. So I think these hypes these hype cycles always happen in any category. That's very normal. What we try to do is we really try to pick the categories that we believe are more longer lasting. And again, right, if you think about what are the three biggest topics for humankind in the next decades, for us, it's really three big things, right? It's agriculture and health, and food. So food, agriculture, food technology, health and wellness. It's mobility. How do things and people move? And it's energy, whether it's energy efficiency, resources, all those. But holistically, what are the biggest key three things that will, change that will change or we will be a part of are those three things in my view.
I think a somewhat contradiction to my previous comment around veering away from hype. I remember you talking to me a while ago about Cherry Bundy,
Yeah.
and obviously I was at school in the UK at the time, and so a lot of these small.
Duke is a big consumer of Cherry Bundy and all their sports teams. Do you have it?
You've just ruined my bit. I had a whole bit. But I'm gonna say it anyway. So I was based in the UK, and so a lot of these more UK centric consumer brands I hadn't heard of, and a complete contradiction from what I was saying about herd mentality. I was taking a health class last semester, focused on the types of food we eat and what we put into our body, and the professor was obsessed with Cherry Bundy. I think after every single class, you probably talked about tart cherry juice, and half of the other students in my class were also athletes who were also taking it. And so I just wanted to mention that people are at Duke are having it, but I'm sure you probably already know that, having said that Duke is one of the teams that consume it.
Yeah.
That's a good positive.
Duke is a big consumer. They buy a lot of our products for all their sports teams. So I'm glad the professor's talking about that. I'm happy to send him a couple of cases of Cherry Bundy. Again, for us, the exciting point of Cherry Bundy is it's like nature's best kept secret for recovery, right? And as an investor, we always saw that right now about close to 500 professional and college sports teams drink this every day post-workout, post-exercise. It's a recovery. It has recovery benefits, significant recovery benefits. But nobody's ever really heard of the product, right? So regular consumers like, what's Cherry Bundy? And so for us, the interesting point was always, how do we bridge that gap, right? You talk to an elite athlete, you talk to anybody in any of the professional leagues at any sports team, and you say, hey, do you know this company? They will all say, yes, of course, I drink it every day. Then you talk to their agents, and they have never heard of it, right? Most likely. And so it's really interesting. That's the mission that we're on. Is we want to get it into more people's hands because look. Everybody, whether you work out, whether you work, whatever you do, you need to recover. And having a little Cherry Bundy in your life will make everybody's life better. Let's put it that way. But I'm glad you saw that in health class because it's true. Look, what we put into our bodies is important, right? And making sure that's good. And we have it obviously at home. My kids drink it, and they've gotten used to it, and it helps. So I'm glad Duke is on board. That's great.
What is your personal philosophy, and how does that align with your business side and your investment interests?
My personal philosophy is positivity. I tend to be always optimistic. Sure, you have your bad moments, your bad days, but I am a positive and optimistic person. And I think if you want to be in venture capital, you need to be positive and optimistic because you need to believe in a better future. You need to believe in, changing people's lives, even if it's just for a tiny little bit, right? A tiny bit of time or a little bit. And so I would say my personal philosophy is positivity, because with positivity comes building great relationships, right? And that's with your children, with your, partner, spouse. If you're positive, that builds strong relationships. So I would say number one is positivity. And number two is, effort. Like, just try to do your best. As I always tell my son and my daughter, who are also, athletes, or let's say, aspiring athletes, whatever that means. I always say, look, there are three really important things. It's like, you got to have fun. You got to put in your best effort, and mistakes are okay. And then overall, that's life philosophy. If you follow those three things, you're going to be fine. Whatever you do, right? You're going to be fine. But it's important to enjoy what you're doing, do the best, and be the best version of yourself, and try to work on that. And, stuff will happen, and things, curveballs will be, this very well. Things will not always go well. And it's important to understand there will be crap days. You will make mistakes. Get yourself back up again and follow those same three rules over and over again. So that's my philosophy.
My penultimate question. We've spoken about what you've done over the past 13 years and beyond. What's next for you in the next 13 years and beyond that point in time?
That's a great question. My view right now for the next 10 years is I want to do what I do right now. I want to learn more. I want to, I want to learn being better at what I'm currently doing. That's basically it. But I really enjoy what I do. I enjoy working with companies, with founders. I enjoy the categories that we look at of trying to do a little good, for our community, for the planet, for people, more specifically. I enjoy that. So that's where I see myself in the next 10 years, continuing to focus on that. And then we'll see where life takes us.
And my final question, and I ask this to every guest, is what is one thing that you would want a listener to take away from this podcast?
Be positive, be optimistic, and be open-minded. From my perspective, I think that's how our conversation started out with is, if you're open-minded and you're positive, things are gonna be good for you, right? And if everybody follows that, I think the world is going to be a better place.
Well,
I truly believe that.
Thank you very much. I think it's been fascinating to learn about your journey. I really like the idea of enjoying and loving what you do, whilst also you adding that realism that it's not going to be great every day. But I think you seem incredibly passionate about what you're doing. And I think once you've found success and you're still willing to do it in the next 10 years, even after you find that success, I think that says a lot. And I hope that anyone listening to this wants to do the same. I think it's also really fascinating with regard to leadership and how you go about not wanting to micromanage. And when you've seen the mistakes that people have been making in the past, you probably want to sweep in and stop them from happening. But sometimes people need to make the mistakes themselves in order to get the learnings. And if there's one takeaway that I would take from this podcast, and that founders should as well, will be that interns should give presentations when they're presenting to Marcel. And if you need a good intern or someone to give that presentation for you, I can be your man. So thank you so much,
I'd love that.
Marcel.
Absolutely. Let's talk about that. Fantastic. Thank you, Harvey.